Hello and welcome to the Bullish Money YouTube channel. It has been quite some time since I've produced an original video, and first of all I wanted to wish all of my subscribers, all of my viewers a happy new year. I hope that it will be a profitable one for you, not only in terms of investments but in whatever life pursuits that you guys are striving towards. I hope that 2016 will be a platform for success. The entity that is not particularly successful so far this year has been Wall Street. The broad financial markets have been absolutely gutted, as many of you know by now. In the 2-week performance that we've had, the opening 2-week performance that we've had in the financial markets it's been the worst in stock market history. And what I see going forward is, in the near term, a lot of choppy volatility up and down. We just don't know. We just can't predict how the near-term fluctuations will occur. But over the long term, I see a continuation of the bearishness. I see that the economics, the economic reality is just very poor, and the market valuation is based upon these poor fundamentals. And one of the things I have been pointing towards is the consumer sentiment is just really not there. You're not seeing not only wage growth, yes, but you're not seeing the increase in consumer sentiment. It continues to be it continues to decline against prior peaks, and I think that overall is problematic, especially when moving forward you want the quality of your earnings per se to improve. You don't want your economy to be based upon cutting jobs and cutting resources. You actually want your economy to grow because your top line is growing, and we're just not seeing that top line growth. Until we do, I really have a bearish attitude towards the financial markets and towards the broader economy. Now, one sector that actually might do well, and I really put a very strong caveat on this, it might do well, I'm not sure, is the military-industrial complex, defense stocks. I think that we are heading towards in a very unprecedented time in history. I think the oil market's very bearish. I think the oil is going to continue its bearish trend line, and that's because with the nuclear deal that has been made with Iran is now going to contribute to the supply glut in crude oil. Once that happens, the price of crude has no direction to go but south. And you're going to see a continued deflation within that specific energy sector. That inevitably will involve Saudi Arabia and other Middle Eastern oil producers into a conflict with Iran. You're going to see within the broader Muslim community, there's going to be big time conflict. This goes beyond the Sunni and Shiite conflict that has been going on for basically thousands of years or hundreds of years. To me, the number one benefactor in that complex dynamic are the defense stocks. But overall, I am very cautious. I am, no pun intended, defensive on the broader equities. I think it's just a very tricky, very dangerous time to have a long exposure in the economy in terms of the broader markets. And so what I would advise to people is to be very vigilant, to be very cautious moving forward. Don't get sucked into a lot of the head fakes. Right now I think we're having the head fake in the Dow Jones and the S&P 500. Oh yeah, the market's moved up 1%, 2%. That must mean the recovery is going to happen imminently. And I just don't believe that. I believe that fundamentally it's rotten. If the fundamentals are rotten, I think the technicals will eventually filter through and follow through the poor fundamentals. So don't get sidetracked with a lot of the head fakes. You're going to see a lot of intraday pops here and there. These are pops that are really technical reactionary movements towards the underlying broad bearishness. So don't get fooled.